Hey there, Craig Johnson, Canopy Mortgage, Ask the Loan Dude. Over the past few days, I have put out some videos on obviously interest rates and specifically the 10-year bond. And I have gotten some messages, which I totally understand, like what in God's name does all this mean? So I want to try to simplify this so that you can wrap your head around it, whether you're a consumer or a realtor. I think understanding this, you can definitely know and have an indication of what's happening in the marketplace. And especially with tomorrow's job report, the BLS report tomorrow, it is a huge number that is going to have a huge impact on the 10-year bond, which correlates. It's not connected, but it correlates to what interest rates are doing. So here is the 10-year bond chart. Make sure I got this. So right here, right? 10-year bond chart going back all the way to January, where I had mentioned several times we had hit a high of 4.80. That's where we were back in January. Now, one of the questions, obviously, that we all should, understand is what impacts interest rate and the cost of that rate, right? Because there are definitely two elements in that. Just because we drop from 4.8 down to say 4.7, 10 basis points, right? That's not going to cause interest rates to fall. It's going to cause the cost of that money, the cost of that rate to get lower. But it's not going to impact the interest rate getting lower. So to give you that, I put this together. So for every 35 basis points in a drop in the 10-year bond, we're going to see about 0.25% in interest rate. So back in January, we were sitting at probably 7.25, right? Today, we're sitting at 6.5, 6.75, somewhere in that range, because we have dropped, right, from 4.80, and currently we're sitting at about 4.28 this morning. We've gotten a little higher. And again, take a look at here is the 10-year bond interest rates. So you can see where we're at on the scale and pay attention there. So there's a couple other things when I talk about ceilings and floors. So what we want to avoid is ceilings, because if we break through a ceiling, that means we could absolutely go higher. And if you look at all this space right here, right? If we broke through that ceiling of 4.33, we could get to 4.60. That opens the door to go much higher. Now, the floor, where we definitely want to break through the floor, because that gives us, again, power to go lower. This is the floor that I keep talking about, 4.126. So if we can get back down this way, going in this direction, right, we might be able to get through that floor and then be able to continue to progress. Because the number that I've talked about time and time again, what we really want to see, because it was golden back in September, 3.80 on the 10-year bond. That is a great place. We were looking at interest rates at 5.75, 5.875. So that really can open up some doors in that way. But hopefully this gives you an insight, and I will continue to keep you updated, but thought I'd shoot this really quick here, get it out so that it answers some questions of impact, correlation to 10-year bond, and the market itself with interest rates. Now go out, have a great day, make something happen. Take care. Bye-bye.